The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, and today being October the 20th, why am I suddenly confused? I only wrote it about 10 times. October the 18th. Good grief. October the 18th. Time's flying. Well, thank you to our host. Great programming. Let's hope that we can keep that going all the way through to 6 o'clock, where Andy Heck comes in at 5 o'clock for that last hour of the day, and we're going to go straight to the numbers. The Dow's up 80 at 18,166. It was a huge, just like the other day, there was a huge opening surge, gave it up, tried to bounce, and now at a peak D in the 2-minute chart in the E-mini, it was stuck at that 200 period exponential moving average, the green line. If the E-mini can close above 2135, it's at 2133.50 right now. That'll suggest even further gains. I think that a chunk of that has been done. UNH was the winner in the Dow, up about 9 points, but IBM took away, down about 4 points. So we'll see what's going on here. Meantime, back at the ranch, if you look at the 10-minute E-mini, made a peak D. Actually, from yesterday at 2 o'clock, it just kept stair-stepping up, and then it surged, and then it stair-stepped sideways, and then boom, it started again, and went all the way from the 2117s to today's high of 2139.75. There's a 9-period moving average resistance at 2135. This is a single leg A, and we'll see how this turns out. My thinking here is that I'm going to draw the arch formation. It's a real struggle to keep sustaining the rally. I think it'll fail. That's my thinking right now. All right, there we go. The Dow, INDU. The Dow's up 78 to 18,165. It's sitting right on the 9-period exponential moving average, having gone higher. This is the pattern that we're looking at. Showed my subscribers a lot of conversation about it, but most importantly, let me just give you this one here. Dow, 120, no daily. Yep, this is the one. Think of this as a tree. Especially here in New England, we got these trees, these huge trees, and then they have the long arm to the right. And you say, how on earth can that branch hold up for decades and decades? What internal strength is there? Well, gravity says that there should be lower highs and lower lows. And that's the way this looks visually. That's the way it's acting. That's the way the 9-period exponential moving average, the little blue line there, is acting. It's right there now. The 20-period exponential moving average, that red one, says couldn't hold it, got repelled just like it did the other day. And now what we're looking at is the arch formation just merely continues. Remember, I drew this Chapman wave pattern, come down sharply, make an H, then the H turns into an M. So we're making maybe a little M right now. But most importantly, the Dow parameters are 18,000. I'd say this morning 18,210s would be very strong resistance. Maybe 18,220s. It went to 18,225. Now it's pulled back at 18,166, up 80. The support level that has to hold is 18,120 to 18,100. A break below that, and you start on your way down again. 120-minute chart. Wrote a lot about that this morning. Right there. I suggested that there could be a balance, but we should start to see a failure pattern by maybe Wednesday, Thursday. And if that's the case, then we should see wave 5 to the downside, breaking underneath the 17,959 low. In the meantime, it's just sideways, and it's attempting to find some support. And it's really a mixed market, as I've been saying for some time. Let's go back to our story. S&P, SPX.X. The S&P, same thing. Actually, it's a little bit weaker than the Dow in chart patterns. It's already made a much deeper leg E to the downside. I could have called that an alternate wave of perhaps C/E, but we'll call it E for now. Most importantly, the weekly chart, like the Dow, is making an H pattern, and it looks like it's going to fail. Just real quickly, for my own sake, I wanted to see that peak D. Yep, we were starting to pull back from the 2-minute peak D. Let's go to the Qs. 1, 2, 3, because Netflix was a big influence. Q series, and we've got a spike to the upside. It's up at 118.13, up 1.31. Most importantly about this is that the weekly chart is hinting that it's making a peak E this week at 119.48. But the technicals are still pretty strong, even though they've started to dip to the downside. Stochastic at 90%, MACD hasn't crossed negative yet. And the daily is making a right shoulder pop to the upside, leg B. We'll see if it fails. Usually you fail at a B, an A or a B. I mean, don't usually go to a C. We'll see what happens over the next day or two. Parameters to watch. 118, I would say 118.55 to 118.70 says, no, there's more strength than you were expecting, mister. And a slide below 117.70 in the 9-period moving area says, no, you're right. Lower highs and lower lows starting to form because we've got a sell signal in the sell mode in the QQQ series. Let's finish this up with an IWM. IWM failure pattern tried to pop today, and now it's up it's up at 65 at 120.95, repelled at the 121.64 area. Weekly chart looks like it's in a sell signal, more like a sell mode, very close to a sell mode. Now let's go on. We're going to go to gold GC, up 4.8 at 12.61. This is a very interesting thing, and I'll tell you why. That weekly chart from three weeks ago, that smash to the downside did so much damage that it impacted the monthly chart. And this is merely just a pop up in the daily, as I can see it, because the dollar is still. I think the dollar is going to a leg D, and that leg D will be above 98.17, the high of the 17th yesterday. If it doesn't do it today, it'll be due tomorrow. If it does it today, it just extends G/C. I think it'll probably be tomorrow. And it's leg D in the weekly chart with the technicals improving. So the dollar is really EUR USD. The dollar is stronger. The euro is pulling back. The USD JPY should be rounding up. It's in C, and it too should go to an overlapping wave C. It should go to a D. That's the story that I'm looking at here. So USD JPY, the dollar, the Japanese yen currency pair looking good. Let's go to crude oil. Always get questioned about crude oil. Crude oil has made a peak C. I'm suspecting there's just one more lunge. It doesn't have to be, because it's still way below the peak D that was made in the weekly chart way back on the week of the 10th of June. Whoops, I grabbed the wrong thing. Let me grab this right here. Yeah, it's way below the previous peak on the 9th of June at 54.67. I suspect that this is going to have one more spike to the upside, about 52.03 for leg D, and then we have to assess everything. Now, a couple of things we want to look at. We want to look at, just as we're about to go to the break, we want to look at the TLT. The TLT is rounding a little bit. It's a 132.66. That 132 area is really important support. And the VIX index, as we go to the break, we took our profits in the TVIX, very nice profits a few times, and now it's down to the 1554 area. That VIX in the 50s says that there should be some selling pressure, in the 14s buying pressure, in the 16s selling pressure. I'll be right back. Basil Chapman, Dow's up 73. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I was asked about if I would comment on the debate coming up tomorrow night. Well, let me just do this. Once again, your vote is your vote. I have no intention of even trying to, I wouldn't even know how to do it, to try to change your vote, because I believe that the people for Clinton are emphatically for Clinton and the ones for Trump are emphatically for Trump. But I'm going to make two suggestions, and this is more for us as listeners than participants. For Hillary Clinton, the way she has been able to succeed over the last week of just stepping aside, not being even seen, just stepping aside, saying that devoting my time to, basically studying my strategy and honing my craft, which of course we know is, it could be true, could not be true, doesn't really matter. If she just avoids any antagonism and just constantly goes towards trying to look presidential and answering the questions as the way she wants it, and constantly coming back to the big issues over and over and over again and saying, I'm only interested in the issues. And just, that's all. No, I'm not interested in abrasiveness. That's all I want to do. And then people will be able to say, yes, she's acting presidential, she's got answers, etc., for the people who are a little undecided. As far as Trump is concerned, I said it last time, it only happened for a little while. I think he can only touch on these extraneous issues briefly, and he has to be really specific. And the reason why I want to spend a little time on this is because we're going to see on Thursday, we're going to see the market anticipate and at the end of Wednesday's session going into the opening Thursday. So yeah, Jay says she has done nothing for 30 years. So what is new? That's Jay. I'm not. That's totally irrelevant to a debate. And of course, you've got Chris Wallace. There's going to be a lot of pressure on him to at least come up with a couple of really good zingers for both sides, and we'll see how that works out. But for Trump, I don't think that he can afford to be abrasive. He's done that all during the week. I think what he has to do is be very specific on programs that he wants to focus on, so that all of a sudden when they get into this debating, people look at what they see. They don't listen to what they want. They only hear what they want to hear, and they see what they see. And it's ironic. Think back of these iconic moments where George Bush, the father, looked at his watch at the most inappropriate time. You got those sighs from Al Gore, and he also looked at his watch. That wasn't quite as important, but he got the sighs. Now, Trump has got these sniffs, and Hillary has got the grins. So people look. Now, I'm looking at this, and I'm saying, okay, I like to look at debates, and I have my own agenda that I'm listening for and waiting for. But at the same time, I like to see it's like the stock analysis. So I'm looking to see what have they come up with that I didn't see, and how effective and effective it is. And to me, what is going to be really important is in the last 5 to 3 minutes of the final debate, how, and this is all that people really look at, well, not all, majority of people, how presidential does each one look? Because that's the image that you're going to be left with going into the election. And Trump, who I believe claims to have all of the art of negotiating and everything down to a science, will miss completely a good 18 to 22%, just my guess, of an electorate out there that is kind of on the fence, or was for him, but now he's just really not sure. And he has to do something in order to get them in, because otherwise he's going to be wiped out. He has no idea what's waiting in store for him. They haven't even gone to the business side. They're going to have people and things coming up for the next 3 weeks that you've never heard of. And that's what's going to get played over and over. If you had to count the number of times his dirty tape was played, you could, it must be in the hundreds of thousands of times. I'm talking about on TV. I'm not talking about on the internet. And yet the very important WikiLeaks information that's come out just gets shoved aside. So you always think of the scales of justice. You got this on the one side, you got that on the other. And if they are very clever, they're able to take 3 tons on this side and take a feather on that side and turn the feather into the most important aspect. That's a major thing that I want to talk about. The other is leapfrogging. I'd spoken about this quite a while ago, and I said, what you have to be impressed with, because no other Republican could have done it, was the way Trump has leapfrogged the entire smorgasbord of attack processes that are going on to still be so close in the election. You have to give him credit for that, regardless of other things that you might think. It is impossible to do, and he's managed to do that. Now, is this going to be the way that he gets elected? I don't think he can do that into the last phase, and we'll see. So it's going to be very, very intriguing to watch. Mostly what we want to see is how do the last 3 to 5 minutes come across, and how does it impact the market? Remember, the market, I don't think right at this moment the market really cares who's in the lead. It just wants some clarity. And if it gets a little clarity on Wednesday night, you might find that the market responds in a very positive way on Thursday. If it's fuzzy, the market remains fuzzy. That's the way I'm looking at it. But in the long term, there are implications, really big implications on both sides. So there you are. So let's go to the dollar just one more time. I just wanted to show you, this is a leg D. D's where you've got to be a little bit careful. I've got a trend line resistance which coincides with the high that was back on the week of the 4th of March at 98.58. So I just wanted to get to that. Then there are a couple of questions, and the questions I just wanted, So once again, I would not have brought up anything about the election except that I do believe that it is going to, for Thursday and Friday, it could be somewhat impactful if there is a sense of a consensus, because the market, you remember the market trades every day with uncertainty. What it hates is uncertainty about uncertainty. My thinking is the uncertainty about uncertainty is going to continue for many weeks into the election. All right. So the transportation index, Bob wants to know, IYT. That is the iShares transportation. index fund, and it's trading. This is very interesting. I could have given this an alternate count. I could have called it a G/C. No, I couldn't. This is a C no matter how I count it. Why? Because after F, 145.64 on the 8th of September, we went higher, and that would have been G/something. Yeah, G/B, and in fact, then you went even higher. You can't get an H, so that has to be a C. It could be a peak C1, C2 double top. My thinking is here that the transportation average has a chance to go to a leg D, about 147 round number high. But it is a D, a peak D in the weekly, but so far it hasn't acted in a very weak manner. It's held the 9-period moving average. We'll talk about this in a moment, but go also to the XAL, and we'll talk crude oil. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, I've got the 10-minute chart right here of gold. Gold's bouncing nicely. It's up 550. You can see what happened. It spiked up to 1265, pulls back to about 1257. Now it's at 1262. I'm trying to form some kind of a base to rally, but I'm trying to put this together with. I'm coming to the transports right now because there's a relationship. Except you've got to hit the right key right there. This is the CL, crude oil. So crude oil is pulling back a little, down 12 cents today. It's kind of holding okay. It has the characteristic here that says that could have been a D, calling it a C, and the MACD has to deflect back up again. Stochastic still good at 80%, but it's starting to get weaker. It's starting to weaken. So it has to happen real soon. And if crude oil pulls back, one of the reasons why you're seeing the XAL running so high is partly because crude oil sort of stalled in this area, but it hasn't really given up anything. So I'm looking at this and I'm saying, gee, is that really strength in the airline index? It's breaking out. It goes to leg B if it can get above 90, right, this one right there, 96.80 in the monthly. It starts leg B, and the high today is 95.80. It's a point below. And this is a leg E. I don't know if it's recycled, but the MACD and stochastic are really good in both the daily, the week, and the weekly. That's very important. Why? Because within the IYT, it's helping a lot. It's helping to stabilize, because some of the, what is JB Hunt? The question is JB Hunt. Is that J? It's not JB, right? No, it's JBH. It's not JBH either. I think it's JBHT. JBHT. Usually I remember the symbols and I forget the stocks. Yep, there it is. Oh, rallying today is up 98 cents, but the weekly chart is not all that great. Neither is the monthly. Ooh, this is going to be very important. How does it had a big slide to the downside yesterday and rebounding today. And it kind of looks IYT. What is Y, which is Allegheny? Let me see. Y is Allegheny Corporation Transportation, made a peak F in the monthly, peak F in the weekly, and a peak E in the daily. Yeah, it's struggling. This is this market is so fascinating. Within sectors, there's weakness and there's strength. Just quite incredible. Look at the Dow. UNH is up huge. It's up 957, up at 143.71. Hasn't got an all-time high, but it's like a point or so away from an all-time high. And IBM was down 4, maybe it's now only down 3. Yep, it's down 5, way down there. So within the Dow, you've got the same kind of dichotomy. So, okay, let's go back. Now, what I was saying is that crude oil looks to me like it's going to be stuck between the 48s and the 53, maybe 54 area for a little while longer. All right? If that's the case, then maybe the XAL, which is the airlines, can go on to higher highs. But when you get Marriott and you've got the resort hotel, this is also the, if I go to, what is this? This is Marriott down from the 85 round number high. It's at 67. It's already hit the 56s. Not a good looking chart. If you look at Hilton, Hyatt is first. Hyatt is Hyatt Hotels, also way off the high in the 64 area. It's plunged to the 34 area. Now it's it's made a peak C in the monthly chart at 50.52. Looks not too bad, but it's not a great looking chart. And HLT's Hilton. HLT, yep, Hilton is the same thing. Made a major high in the 31s back in earlier this year. Plummets to the 617s. I mean, that's a huge move down. And then now it's back at 23 halfway. This is a mixed market, because if the airlines are still running strongly, it has to do with, I think it has to do with the economy, after all. But it also has to do with transportation. More people travel by plane now. It's just like the normal thing to do. So that, in fact, and also they've cut back on the number of planes. They have all the restrictions, and they started to make money from everything. So I'm looking at this and I'm saying, okay, mixed market there as well. Transportation average has some weak links in the rails. Oh, CSX. Let's see what CSX is. Oh, weak link in the. Well, that's at a nice rally off the 21s. That's at 31, and it's gone to a leg EF. This is a possible F. Oh, we're going to be watching this one real closely. D, E, a peak E/A, and in the weekly chart, it's also an E with a very big doji candle last week, and that suggests there's a trading band. If CSX, this rails, trading at 31.11 is up 9 cents. If it's able to break and close above 32.30 within the next 4 trading days, that's going to be very important. If it fails and goes under $29.50, that's going to say, oops, needs a consolidation. So I'm watching all these things. So I got into this by saying, I have to go back to That's right. So we were looking at the transportation index, and I'm saying kind of a mixed market. At the same time, I'm looking at strength and weakness in the economy. Remember, CTS is the overalls. We had it as a short, and then it pulled back from 119.94, trading at 108.76. I think this is telling us a lot about the economy as well. So this is a mixed market in the sense that I've got enough evidence to say there are areas of weakness, even areas of recession. CTAS is saying mini recession right now, overalls and clothing rentals. And on the other side, you've got the transportation average mixed with the airlines doing very well, and CSX up until now having a really good rebound. If you look at the retail index, look at that H pattern. This is not good. Why? Because within the retail, the RTH, it has Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, McKesson, Target, TJX, got the bunch. This is really quite important, BBBY. So I'm looking at this and I'm saying, okay, something's going on here that suggests that at this particular time, there's a very mixed market, and that's exactly what the market itself is saying. So now I want to go to the question came up of, where was it? It just disappeared. Oh, could I look at Netflix? Of course I can look at Netflix. Netflix trading right now. Oh, look at that. It's gone to a leg D, big spike up 19. Is that an all-time? No, all-time high is 133.27. This is leg E in the week, D in the daily, E in the weekly, and leg B, gray B, in the monthly because it's under the previous high of 133.27 made in December of 2015. So, okay. So what is that saying? Because if you look at Google, I'm still going to go to Google if you don't mind, rather than the updated one. Google is in leg E. Good action in the daily, C in the weekly, and E in the monthly. So that's still acting very well. And it had quite a bit of a pullback. It went from the 789 area down to the I think it was 657. Let me just double check. 663. And now it's trading at 796. So this is going to be very interesting as we watch this play out. And, VIX index, that's what I said. I think I did look at the VIX. Didn't I do that? Didn't. The VIX is at 15. Yes, I did. The VIX is at 15.45, down 76. In the 15s, it's suggesting buying pressure. In the 14s, you could go up to a triple-digit buying pressure. In the 16s, you get to triple-digit down selling pressure. Just keep that in mind. Make it easy. I'll be right back. Basil Chapman, Tiger Technicians Hour. Yes. Yeah, it's up 85.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I had a question about BCE Inc. I have no clue as to what they do. Let me just have a look here. BCE. If I can find it, BCE, move that over. Move it over there. Put it in BCE Inc. and just pop it in and see what happens. Canadian Enterprises, top communications company, information, governance, responsibility, news, media, community. Right, telephone. Oh, that's Bell Canada. Okay, all right. So the question is this something you want to look at as a dividend play? And I looked at it, I remember looking at it before and deciding that, no, I don't think so. I also remember looking at it, and at the very same time I was doing the analysis, I said, you've got to come back to it because this is a fantastic example of the Chapman wave. Let me just put this here. The Chapman wave unconventional flat-based restart. A lot of words, but it actually explains exactly what it is. So in the Chapman wave, you get this thing called the instant restart, and within 3 bars, you make a new high, and that becomes an E/A. Certain characteristics within that can tell you whether it's going to go to a G, the 7th wave, and then fail. I've done a whole ton of studies on leg G, that's the 7th wave, and there are implications. But most importantly, is I looked at it and I thought, okay, now I can see what it is. And then I completely forgot because, of course, I move on very quickly to other things. And then I said, no. You've got to do this. This is what's called the Chapman wave flat base restart. And I'm going to go to the A. I'm going to go to the doji candle right there. And what this says is that within a certain period, there should be a number of attempts to go above the low of the pullback of D, and that would be at 44.94. And in fact, what you would get is a series of highs that looks very much like Bart Simpson's hairstyle, this kind of jagged up and down look. And basically what we're looking at here, I'm going to make this pink. Look at this. This is a great little lesson that you're going to get. Thank you. I completely forgot about it, and now I'm going to do it. Look, you see that pink A? That's an instant restart, pink A, pink B. And what is the rule of this particular technique? It says that no matter how high you go, you're not going to go all that much higher. You're going to keep failing and coming back to test very close to that trough at D. In this case, it's not really a trough, but it's a low bar that I mentioned at 44.60. But you'll still continue until you get to a D, but very often this pattern goes to an E, can even go to an F. And lo and behold, what do? We get a peak E right there. You had that pullback at the peak C that went right to 44.78, tested the 48.64 low. That was 48. Whoops, where did it go? 44.68 low of that leg D. And it still went higher, and then it went to peak E, and then what happens? It breaks it. And what did it do 3 weeks ago? It went to 44.50. It's down. So now what you look at, you can say you can now get another bounce to the upside, and this is leg A. And it says there should be a trading band, and the trading band should now go between 47, around about 47.50, 47.30, and 44. And if it takes out 44, you're going to test the 43.16 200-period moving average. Within the context of this pattern, once it's complete, and we're not yet 100% sure that it's complete, if it takes out a left side moving average or peak of significance, that says it is done with that entire consolidation and it is now moving higher. And that would confirm that the the monthly has made a peak B, and that it should go above 49.03 for leg C. So now I can answer you a little differently. If you're prepared, Peaky in the Den, to buy BCE as we're speaking right now at 46.21, I wouldn't give it more than a point. I know it's a dividend stock for you, so you already don't want to give away a point when you're only going to get a 48 or 52 cent dividend. But the reason why I'm saying I'm prepared to use the 45.50, 45.75 is the 9-period moving average, 45.64 is the 200-period. But I'm going to prepare to give it all the way to the 45.50 as support, is because if this does bounce, you can have a good 5 to even 8 weeks of upside activity, which will allow you to get that dividend again, probably. But I would treat it as a starter position, and it's one that I would probably not feel uncomfortable because of the monthly chart improving so much to add to it, but I'd only add it on a weekly chart if it can push above. It's at 46.20 now. If it can go into the, if it can even get into the 46.50s and then have a little bit of a pullback, and as it starts to move back higher, I'd add to it. So remind me about it. Meantime, I'm saying yes, step in at 46.20 as a starter position. I know for dividend, having just a little bit is useless. You really want a big chunk, but this is one that you might be able to build a base on this formation that's formed, because the stochastic, although it's not great at 21% in the weekly chart, will improve if this can move up even 1 point. So that's just a starter position, but nothing more. BCE. All right, next thing we've got is a question about, right here, a question about, let me see if I can do anything with this TRCCI. This is the commodity index, and I'll tell you why I want to look at it. It was really important with the big spike and pullback that occurred the week of the 23rd of September to 429.37, and then closing way down above the 9-period moving average, and then falling under the moving average and then coming back again. This particular pattern says to me, yes, there's a rectangle in the commodity index. It's trading at 420.31, up $1.63. A nice little bounce within this containment area. But what's really important about this, and one of the reasons why I'm looking at the commodities individually, and I'm saying, look, wheat, it's finally broken out. Remember I said wheat, soy was the one that was weak. Wheat is acting a little bit better. Corn is acting fabulously. It went to a peak D. But it's soy that I was waiting for it to move, and it's finally moving. So soy has made the arch formation. It's potentially going to make a lowercase h to a lowercase m, but that'll be a successful test. Let me show you right here. Right here. This will be a successful test if there is a close at any point in the next week. 2 closes out of 3 above 989 3/4 would say, yes, finally the weekly chart has made a U-turn and is able to tackle the 1020 area, 1020 area that was made the 26th of August. So that's making us a big improvement. Let me look at also the natural gas, NG. NG has made a peak B. I think I'm going to call this a B. I don't see any reason why. Yeah, it could be a G/B, but I'm going to call it a B because it's very strong both in the weekly and the daily. I like it. I like the monthly. I think natural gas is looking very good. Seasonality, I should have waited to find out from there we go, from our friend in the 5 o'clock hour, Andy, and see if that's correct. But I think I like this, and I say there could be, the reason why there's a big pink bee is I haven't changed it yet. I'll change it during the break, and we'll be right back. Basil Chapman, Target Conditions Hour. Be right back. Dow's up 96.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. We're looking at the 2-minute chart. We just made a second peak D from that low that was made back at 22 minutes past 10 at 21.29. This is acting quite well. MACD's good. Stochastic's good. Holding very nicely. That's the 2-minute chart. 10-minute chart suggests. That's crude oil. I wasn't going to do that. I wanted to do the ES. There we go. Leg B. All right, I put that in two patterns, 2 fighting patterns. I didn't have a chance to do this. Normally what I would do is I'd draw that, and I'd look towards by making a right there, left side equals right side, price time match. One more right there. And we got that. I'm doing it quickly. Almost got it in, a little late. Okay. So we're getting there late, and now it's accelerating up, and we've got that V-shaped pattern. So, yes, this is a good comeback by the market. It was down, it was up huge, and it was pulled back very sharply. Now it's up 106 in the Dow, 16 in the S&P. This is going to be very important. Couple of things that I want to look at. Goldman Sachs, good question. Adam wanted to know about Goldman Sachs earnings up. Can't break it. Can it break above 175, 180 later in 2016? Yes, I think it can. I'm looking at this and I'm saying, I spoke about it the other day and I said, gold was starting to look very nice. I was going to put it on for my subscribers as a buy, and then we were doing other things. So in the meantime, I like this. This is leg C up, and it suggests, remember I was saying, I think it was yesterday, I said, I've seen times where the market has pulled back and you've got, say, housing stocks moving up. You have seen the market pull back and you get autos moving independently or banks moving independently higher. So this is a rotational market, and you're looking at sector by sector. If I go to, say, Ford here is up just, it's down now, down 11. It's just not doing what it should be doing. General Motors, same thing. Now, what's really important is that GE, which has been a bellwether for us, is up 13 cents. It's just not a great chart. This is leg B. But it has at least made a leg B, is trying for something, is desperately trying to hold on to the channel, the up channel inside track support. If G at any point during the week closes under 28.60, it's at 28.98 now, that's going to be a negative thing. And if it closes the week under that, that's going to be saying, oh, be careful in the market. Right now it's saying market can hold fairly well, at least for now. So a couple of other things that we're looking at here. OZM, I don't think I've got time for that. Let me just put it in OZM, see what we get. OZM. Yeah, a nice bounce off the low. I can't spend time on this because I need a little more to give you some veracity. And let me go back to the VIX index right now. The VIX index is trading at 1526. Remember what I said, going down to the low 15s, especially the 14s, suggests that there will be more internal buying in the market. We're on the 200 period right now. So let me make it clear. Trading under 15 allows the market to hold very well and have it close towards the higher part of the day. If you're looking at the reverse, a sudden downturn later on, then you'll see the VIX go back to the 1560s and the market will stall. In the 16s, I don't think it's going to happen today, but in the 16s, the market pulls back much sharper. Mixed market, think about it. Look for your individual stocks. Look for the action in the QQQs. Look for the action in Amazon. Look for the action in the semiconductor index. There are a number of Qs that you can use right now as benchmarks, and General Electric. It can really help you. Just a quick question about PYPL, PayPal. Oh, it's just in this trading band. It's got 40.50 is resistance and 39.20 will be support. Okay, with that said, have a fantastic day, and I'll see you back tomorrow. And in the meantime, just watch those parameters. We're setting up nicely here in my opening call. We've got positions that we're taking in expectation of what we think can happen, and we'll see how it unfolds. But actually, we are lighter than usual in longs and shorts. I'll be back tomorrow. Have a great day, and stay tuned for your swimming lesson and all the other sessions this afternoon. Don't forget Steve's workshop for Wednesday night, tomorrow night. Check the front page of TFNN. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.